Hello and welcome to this short series on WAM Active. My name is Tomasina East. I'm in the Investor Relations team here at Wilson Asset Management. And today I'm joined by Shaun Weick, who is the Portfolio Manager of WAM Active. Thank you for joining me today, Shaun. So Shaun, what is WAM Active?
So the WAM Active portfolio is focused on ASX listed or domestic equities. The fund is a bottom-up stock picking process where really we're trying to identify catalysts that we think can re-rate share prices. The fund is very actively managed, which is reflected in a high level of portfolio turnover, around sort of 10 times per year. It has the ability to go both long and short, i.e. bet on share prices going up and bet on share prices going down, and also the ability to use options as protection. If we think the markets are potentially getting a bit more risky and we want some downside protection.
How many stocks would you tend to hold within the portfolio?
The portfolio is typically holding around 25 to 30 positions. And it will, take concentrated bets on high conviction ideas. So, you can see positions, go upwards to 8 to 10% of the fund at times when we do have high conviction on the re-rate opportunity.
Amazing. And so how does it differ from the likes of WAM Capital, WAM Research and WAM Microcap?
Yeah, so I think we've touched on a few of the points, but the key differences are generally around the level of concentration within the position. So it typically will take higher conviction, larger position sizes within the fund. It's also got more of a focus on actively managing, I suppose, the fund towards specific catalysts, which means we're dialing up and down the size of the positions much more regularly. So the result of that is that the portfolio turnover is substantially higher than what you'd see across the other funds. So as it stands, in the current financial year, the turnover is around about 10 times. So that is a reflection of that. And then, the final point's probably around exposure to the resources sector. It's something that, I guess was formed based around our views on the broader macroeconomic environment, and that materials sector exposure will sort of dial up and down based on that. But over the past 12 months in particular, it's been, overweight resources relative to the other funds.
Amazing. So you have just touched on how much you turn over the portfolio, and it's very much so based on the wider macroeconomics. Is there anything else that would drive you to turn over the portfolio, or is it mainly just watching the market and how it moves?
Yeah, it's really around watching the market and sort of trying to identify the key sort of themes we're seeing in the market, and then catalysts for individual stocks. The other factors I'd say is, we do play pretty heavily in terms of placements and broader corporate activity. So when companies are raising money, management sell downs, etc., we're actively looking for mispricing opportunities out there. So that's another factor that contributes as well.
How would you then, obviously you are turning it over a lot, how does that then generate franking for our shareholders? Yeah,
so the key driver of franking for the fund is really around realised profits. So effectively it's locking in gains on trading positions.
So once you've sold a position and then that tax is how. And so how is WAM Active currently trading relative to its NTA?
Yeah, so it's trading at a discount of around 9% relative to its NTA as it stands. I think this is largely a function of, the performance has obviously been quite strong. And, the shares have had a good run, I suppose, over the last 12 months. So, I think it's more a case of just where things are at from a, performance versus share price point of view as opposed to anything else.
Yeah, so it's sort of the performance is outrunning the share price at the moment, and that's widening. Yeah. And so do you see that discount as kind of an attractive entry point for shareholders? Yeah,
Jeff's always said you should be buying, things for cents in the dollar. So I think, a discount to is definitely attractive. And I think, in terms of the setup and how we see things going forward, I think, now is a good entry point.
Great. Well, thank you for your insights, Shaun. And in the next video, we'll be discussing a bit more around the performance.